friends. This is the second video of the chapter Admission of a Partner. In the first video, I have discussed about the new profit sharing ratio and sacrificing ratio of the existing partners. In the second part of admission of a partner, I will be focusing on the goodwill and its accounting treatment. Let us start with accounting treatment of goodwill. As per AS 26, goodwill is recorded in the books of accounts only when consideration in the form of money or money's worth has been paid for it. Thus, goodwill should not be raised in the books of the firm. If the incoming partner brings premium for goodwill in cash, besides the share of capital contribution, such premium should be distributed among the existing partners in the ratio of their sacrifice. This is what I have told you in my first video of the chapter. Sacrificing ratio is going to be in use for compensating the existing partners in the form of goodwill. If the goodwill is not brought in cash at the time of admission, it should be adjusted through partners' capital accounts. For example, C is a new partner and he shows his inability to bring the amount of goodwill. In that case, amount of goodwill of his share will be taken out of his capital and is debited in his capital account. Goodwill of the firm is the result of efforts made by the existing partners of the firm in the past, and that's why the amount which is brought in by the incoming partner is shared by the old partners in their sacrificing ratio. Thus, the incoming partner who acquires share in the future profits of the firm must compensate the existing partners who have sacrificed their existing profit share in favor of incoming partner. Following are the situations pertaining to treatment of goodwill. Number 1. When the amount of goodwill is paid by the incoming partner privately, it may happen that the partners do agree upon nothing is to be shown in the books of accounts. In that case, no journal entry is required in the books of accounts because the amount is paid privately by the incoming partner. Case 2. When incoming partner brings his share of goodwill in cash. When the incoming partner brings his share of goodwill or premium in cash, it is distributed among the old partners in their sacrificing ratio. The goodwill share received by the existing partner may either be retained in the firm or may be withdrawn by the old partners from the firm. So these are the two options available with the existing partners. When new partner brings his share of goodwill in cash, the same may be retained in the firm or may be withdrawn by the old partners from the firm. Let us go through the accounting entries that we need to pass in this case. First case, when amount of goodwill is retained in the business. In such a case, we need to pass two entries. The first entry will be cash account debited to premium for goodwill account and to new partner's capital account. We all know that a new partner, the incoming partner, will bring his share of capital as well as his share of premium for goodwill. So whatever the total amount comes in the business, for that cash account needs to be debited and premium for goodwill and capital should be credited. The second entry required over here will be to distribute the amount of goodwill among the existing partners in their sacrificing ratio. Premium for goodwill account debited to old partners capital account. You can see that in the narration part. This entry is required for the distribution of amount of goodwill among old partners in their sacrificing ratio. You should remember that the old partners will be credited and in their sacrificing ratio only. Second case, when the amount of goodwill is withdrawn by old partners. In such a case, we need to pass 3 entries. First 2 entries will remain same as what we have seen in case 1. The first entry for the amount that is brought in by the incoming partner in the form of capital and premium for goodwill. Entry is cash account debited to premium for goodwill account to new partner's capital account. Second entry for giving away the benefit of goodwill to old partner's capital account. The entry is premium for goodwill account debited to old partner's capital account in their sacrificing ratio. Now, the third entry, when the amount is withdrawn by the partners, the required entry is old partner's capital account debited to cash or bank account. Whatever the amount is actually withdrawn, for that amount the entry is written. The partners may agree upon to withdraw the full amount or maybe part of the goodwill is withdrawn by the partners. So whatever the actual amount is withdrawn, the third entry will be passed for the amount withdrawn by the old partners. We need to take a note over here, which I have already told you. If old partners withdraw amount of goodwill partly, entry should be passed with the withdrawn amount only. What entry shall we pass for goodwill which has already been created by the partners in the firm? When goodwill appears in the books, if the amount of goodwill already appears in the books, the existing goodwill must be written off in the old ratio of old partners by making the following entry. You can see the entry over there. Old partners capital account debited to goodwill account. Old partners capital account will be debited in their old ratio. Incoming partner brings his share of goodwill or premium in kind. It may happen that the incoming partner does not bring cash, but he may bring some of the assets in the form of goodwill. The entries required at that point of time will be: first, when the amount of goodwill or premium is brought in kind. Say for example, some assets have been brought in. So the assets brought in will have to be debited to premium for goodwill account. And we know like this premium for goodwill account has to be shared by the existing partners in their sacrificing ratio. So the second entry can be seen as premium for goodwill account debited to old partners capital account. What if incoming partner does not bring his share of goodwill in cash? In that case, the amount of goodwill will have to be taken out of his capital. If the incoming partner is unable to bring his share of premium in cash, it is adjusted through partner's capital or current account. The entry required over here is new partner's capital account debited to old partner's capital or current account. Again, I remind you, the old partners will get a credit in their sacrificing ratio only. Incoming partner bring in only part of his goodwill or premium in cash. This may happen that the full amount of goodwill is not brought in by the incoming partner. He may bring only a part of his share of goodwill. What entries are required in that case? If incoming partner brings his share of goodwill partly in cash, cash portion will be adjusted among the old partners in their sacrificing ratio, and for rest of the portion of goodwill share, adjustment will be made as if he did not bring his share of goodwill in cash. This means that the new partner's capital account will be debited and old partner's capital account will be credited. What if the gain is received by the old partner along with the incoming partner? During admission of a partner, we all know that the profit sharing ratio changes. It may result in gain to even an old partner besides the incoming partner. The goodwill brought in by an incoming partner is shared by the sacrificing partners. We all know that. Similarly, the old partner who has gained due to reconstitution of the firm should also compensate the sacrificing partners for goodwill share. The most important part of goodwill, hidden or inferred goodwill. Sometimes goodwill share brought in by the incoming partner is not given in the question. Goodwill in such cases is computed on the basis of an inferred method of profit sharing ratio or by using capitalization method. Following steps are used to find out the value of hidden goodwill. Step number 1. To find out the total or the expected capital of the new firm, which will be based on the new partner's capital and his share. Capital of the new firm is computed on the basis of incoming partner's capital and his share in profit. Let us see an example over here. C is admitted as a partner, contributing Rs 40,000 for 1/5 share in profit. In this example, we can see that new partner's capital and his share in profit is given. Based on that information given, we will be able to calculate the expected capital of the new firm. Let us see how it is to be calculated. So, expected capital of the new firm will be 40,000 into 5 by 1, that is Rs 2 lakhs. So 2 lakh is the expected capital of the new firm. Step number 2. To find out the actual capital of the firm, including incoming partner's capital. Let us see that with the help of an example. A and B are the two existing partners who have been sharing the profits and losses in the ratio of 3:2. The capitals of A and B is 60,000 and 50,000 respectively. C is admitted for 1/5 share, contributing Rs 40,000 as capital. We already have gone through the expected capital, which was Rs 2 lakh. Now, let us calculate the actual capital. So, actual capital will be the capital of A, B and C. Capital of A and B was Rs 60,000 and 50,000, and the amount of capital brought in by C was Rs 40,000. The total of the three amounts can be seen as 1,50,000. So, my expected capital, step number 1, is Rs 2 lakh, and step number 2, the actual capital is Rs 1,50,000. One should also take a note that if on date of admission some reserves appear in the books, then reserves are also to be taken into consideration for calculating actual capital of the firm. That means, along with the capital, if any reserves are available on the date of admission, you have to take that reserve also into consideration and then calculate the actual capital. Step number 3. Now we need to calculate the goodwill of the firm, which shall be the difference between the expected capital and the actual capital. The amount of difference between the expected capital and the actual capital will be the amount of goodwill. We already have gone through this. We calculated the expected capital, which was Rs 2 lakh. And then the actual capital was also calculated earlier, that was Rs 1,50,000. The difference of the two is Rs 50,000, and that is nothing but goodwill. This is going to be the firm's goodwill. Out of this firm's goodwill, new partner or the incoming partner will bring his share of goodwill. I'm sure with the help of this video, I have made you clear with the concept of goodwill at the time of admission of a partner. Do like, share, comment and subscribe my channel. Thank you so much. God bless you all.